Welcome to Happy Homes and Gardens. I'm your host. My name is Daphne Royse. I am a real estate broker, architecture, and interior designer. As many of you know, real estate is the most successful investment of the last decade. The return of real estate is better than gold, bonds, mutual funds, stocks, and saving accounts. There are many ways to invest in real estate. You can invest in residential homes, commercial buildings, vacant lots, like retail stores, shopping malls, etc. We have a special guest today to share her knowledge and experience of real estate investment involving small funds, no hassles, and great returns. Let's welcome Elsa, and she will discuss real estate syndication with us today. Hello, Elsa.
Hello, Daphne. Thank you so much for having me on the show today. I really appreciate that.
Well, thank you. We love to have you. Would you please tell us a little bit about you?
Absolutely, of course. Yeah, so my name is Elsa Nguyen, and I am a real estate agent. Started out selling and buying real estate since 2002, part-time. And beside that, I also work as a financial controller for corporate. And fast forward into late 2000, early 2020s, I started to venture into other real estate ventures, and I wanted to buy apartments building. I wanted to grow beyond single family. And I see all this, I drove down the street, I saw all this apartments building, and I figured this must be owned by somebody. Never thought that I would be able to buy this until I learned that we can do all this through what's called a syndication. And I spent a couple of years learning about the syndication business. And here I am today to share that secret with all of us here, because there are possibility, there are many possibilities out there for us to partner up and buy this commercial buildings together. And that's what syndication is all about.
Wonderful. So would you mind to explain a little bit more on details about real estate syndication?
Of course, Daphne. So real estate syndication is basically a group of people that pour the money together to buy a real estate asset that they probably won't be able to buy on their own. So if you see those 100 units apartment out there or a big commercial building, and if you are an average person like me, we probably would be able to buy a single family, maybe a few single family homes and then rent it out. But there is a way to buy these apartment buildings as a group of people come together, put their money together and purchase those property. And that's what a real estate syndication is.
Why people should invest in syndication?
So the reason that syndication is a very attractive, desirable way to grow your real estate portfolio, because if you were to go out and buy a single family on your own, you have to manage the property by yourself, right? So you have to deal with tenants, with toilets, with plumbing issue and all of that. And time is another issue. If you have an 8-to-5 job, you have very limited time on taking care of those items. A third factor is cash. So here in the Bay Area, we all know that houses here are so expensive. You know, like you would be really lucky if you find something that is $1 million. And in order to buy those, you probably need $200,000 to $300,000 for a down payment. Right, so not many people have that kind of saving to go out and buy a single family house and rent it out. And then lastly is the liability. When you own a single family house and you rent it out to people, it comes with liability. And if you have a good tenant that pay rents every month, that would be the perfect world. But sometimes we do have some troublesome tenants that live in there, and they may choose to trash your property. They may choose not to pay rent, or if they, if they are suer, they like to go around and sue people. They may go after everything. They may go after your assets, your house and your other assets. Whereas if you invest in a syndication as a limited partners, you are only liable for up to the amount that you invest in the offering. For example, if you invest $50,000 into an offering, then because you are limited partner, you are only liable up to $50,000. That's the maximum amount that you will lose in that deal, just in case if a tenant sue you or anything. So this is why syndication it limits a lot of risk as compared to you being the sponsor and go out there and buy the property yourself.
Okay, so not everywhere in the country is affordable, especially we in San Francisco Bay Area. The real estate is just so expensive here. Is there any syndication that is actually right for investors? Are they right for people that really want to invest in real estate?
Yeah, of course. So, there are a few things that you need to consider before you start putting money into a syndication, and you have to see if you need to do a little bit of homework and think through this before you invest to see if this is right for you. So, for example, if you are the one who like to have full control over everything that you do, right? Then buy a single family, and then you manage and you have the direct access to the tenants. You control the, when to increase rent and so on and so forth. If you are that type of person who likes to have full control over your assets, then syndication might not be the right thing for you to do, because when you are a limited partner, you relinquish those rights to the sponsor. So you may have 2 or 3 or maybe 3 sponsors on the deal who call the general partners, and they are the one who decide, pretty much have a major decision on how to drive the business to maximize the profits for the investors. And so the limited partners will have some voting right, but they don't have the full authority over everything that will be done. So that is something to take into consideration, whether syndication is right for you or not. You have to keep in mind, yes, you get to share in the profits, and you get a nice cash flow every month, but you relinquish a lot of this responsibilities into the hands of the general partners. And another thing that you may want to take into consideration is, if you are if you go out and you buy a property, a single family by yourself, even if you have the down payment to do it, then that would be easy, because it's all about leverage in real estate. You have 20-30% now, you can go out and you can buy a single family. But if you want to buy an apartment, now we're looking at $10-20 million deal, and you only have so much, $200,000-$300,000 is not going to get you there. It's not going to get you ownership in that big apartments out there. So you have to take into consideration and leverage someone else's balance sheet, right? Someone else's experience for you to become the owner of that apartment building. So that are some of the things that you have to consider before you decide whether or not syndication is the right thing for you to be in.
So it sounds like syndication is dedicated to the bigger investment.
That is true. Yes and no, because if you are going to go out and buy a property, say for $2 million, right? There's only so much profit that you can make in that deal. So I wouldn't pour into 20 investors to go out and buy a $2 million apartment, right? So maybe I'll just bring in 1 or 2 investors to get that deal done. So we all can maximize our profits that way. But if you were to go out and buy a property for $20 million, then you definitely need a bigger pool of investors. because now there's enough profit in there for everyone to share because it's a bigger deal.
Is a syndication limit to certain states?
Syndication is legal in every state, and it is regulated by the SEC, which is called the Security Exchange Commission. We don't just go out and ask investors to invest in us unless we have already filled out the paperwork. And it is regulated under, there's two types of investors. We call them accredited investor and sophisticated investors. Accredited investors are those who have a certain amount of assets. So basically they have to have, the SEC rules is that they have to have over $1 million in net worth beside their primary resident, or they must have at least $200,000 in annual income. If they have a spouse that invests with them together, they must have $300,000 annual income, and they must have had earned those income in the last 2 years. So those are for accredited investors. We also have what's called sophisticated investors. So there are the investors out there that they want to invest, but they're not accredited. So what are we going to do? So the SEC rules say that then you have to be at least a sophisticated investor. You have to have a personal relationship with the sponsor. They need to educate you on everything about real estate before you're willing to take the risk. And SEC basically is to protect the investor. They want to make sure that you know what you're doing because the dollars amount is bigger, and they don't want you to take the risk unless you know what you'll get yourself into. So those are the things that been regulated. It's highly regulated by the SEC. Whenever we put a deal into, we structure a deal, we have to hire what's called an SEC attorney to put together the paperwork for us. They put together what's called a private placement memorandum, and it is written by the SEC attorney. And then also the operating agreements would regulate how this deal gonna work, right? We have every details about the assets and what the return's gonna look like and who is going to manage the property and when you're gonna get your money back. So the operating agreement will outline all of that along with the private placement memorandum. And then the investors, the limited partner or investor will read all that. It's a very thick document, and they'll decide whether or not that this is the right thing for them to do. And then the SEC attorney, of course, will always be available to answer any question that you have.
Who will be the people that are eligible to invest in real estate syndication?
Anyone is eligible. So as I mentioned, you're either, if you are an accredited investor, you can invest in anything you want with anybody, even if you don't have a relationship with that person, even if you don't know that sponsor. But as long as you are accredited investors and you qualify those, there will be always a questionnaire that you fill out whenever you get into these deals, and they'll ask you whether you are an accredited investor or not. Then you can invest with any sponsor you want. But if you are not an accredited investor, then you have to make sure that you have to have a pre-established relationship with the sponsor.
So I'm eligible to invest in real estate syndication. Would you tell us about what return that we're expecting to see?
Yes, so of course that's the most that's the most attractive part about the syndication. So typically we what we typically do, the way that we structure is that the investor get to share in both the monthly cash flow as well as the profit that I call it the company because I treat every apartment I buy as a company. It is, so they, both the limited partner and the general partners get to participate in those returns. The general partners don't get the monthly cash flow. The limited partner get the monthly cash flow because they put the capital in there. So typically what happened is that if they, a typical structure would be a 7 to 8% preferred return on the dollars amount that you invest in the deal. And then you also get to share when we refinance or when we sell the property and there are a profit, you also get to share in that. So let me break it out that way. So if you're gonna invest $100,000 into a deal, we go out and we buy this apartment for $5 million, okay? We put the offering together, you get 10% preferred return a year, and then you get to share 50% of the profit after you get your preferred return. So the limited investor will always be the first one that get the money back after we pay all the expenses, the operating expenses, and then the lenders, of course. And then after that, the limited partner will be the first one that get their return before anyone else get paid. So they will get their 10% preferred return. Normally we distribute that on a monthly or quarterly basis. And then after they get their preferred return back and we have whatever that left in that little pile, they'll get an additional, they get to split with the general partner on a 50-50 or 70-30 basis, depend on the deal. And 70 will go to the limited partner, 30% will go to the general partners. It's the same when we refinance the property or when we sell the property. So say this property we buy for $5 million and 3 years we are going to work on the property, we're gonna better the property, we increase the rent income, we reduce expenses. Now the property 3 years later worth $8 million. We are going to refinance the property, we're gonna pour out a bunch of cash and we're gonna return all the capital back to the investors. And then any profit left, the investors still get to share in that profit 70-30%. And then the investor, now they get all the money back, but they still stay on the deal until we sell the property. So every year they will get what's called the infinite return, because now they get all the capital back, but they still get that monthly or quarterly distribution based on the profits. And then until we sell the property, they still get to share in that profit with the sponsor. So that's how the returns work in general.
Do you have a particular length of investment, like how many years? What's the average? When you invest till you get a return, I mean, the period of time, how long would that normally be?
Oh, yes. So normally the holding period for most of my deals, I do 3 to 5 years. 3 years is when I refinance and get the capital back. 5 years is when we sell the property. So that is a typical structure. I normally do interest only so we can maximize the monthly return. And on a typical deal structure, most of the investor will get about between the 7 or 8 preferred return that they get every month and the profit that they share. They are looking at between 15 to 20% annual returns. And that means they can double their investment in about 4 to 5 years period. Does that make sense? Because they get about 15 to 20% return every year.
It sounds wonderful. If there's some people like me who would like to learn more about real estate syndication, how would you educate them and get them prepared for the future investment?
That's a fantastic question, Daphne. Every investor, I highly recommend that before they invest in any deal at all, whether with me or any sponsor, they should do some research on the sponsor themselves, because this is a lot of money that they invest in. So don't be too naive and take whatever that the sponsor tell you. You should do some research on that sponsor yourself, see what kind of experience that they have, what kind of deals they have done before. Maybe talk to some of their former investors to get a feedback about that sponsor. Research the numbers. So if they're gonna tell you invest in Phoenix with me and so on and so forth, do some research about the Phoenix market to verify the numbers are correct. I myself, I do a lot of Zoom calls, and I give a lot of free education to my audiences. And I have a weekly Zoom call that I do, and oftentimes I would invite either myself or speakers to speak on the multifamily topics, whether how to underwrite a deal, basically look at the raw number that the brokers give us, put it into an Excel format, calculate the rent, calculate the expenses. This is what you get. You increase the rent, you reduce the expenses. 5 years from now, this is what you get. So I show people all of the numbers behind the scene. And we call that underwriting the deals or deal analysis, whatever you want to call that. I also invite CPA to come and share with people about the tax benefits of investing in real estate. So there are a lot of tax benefits, and I would invite professional as CPA to come and share with investors on that topic as well. And then I have my SEC attorney come and share on what is the legal way to structure the deal and all the regulation that attach to investing in a real estate offering like this. So those are some of the things that I do as a sponsor. I want my investor to be extremely comfortable with me. I meet with them in person. I go coffee, I have a drinks with them all the time just to make sure that they know me well. They know where I live. They know my number. They know my email address. And I always establish that relationship with them before I even share anything with them. And I have, some people that watch me for years before they start reach out to me. And normally I don't. When I go out with friends, I never ask them for like, hey, invest with me or anything. But they watch me over the years, and then one day they just go, okay, Elsa, I'm ready to invest. I'm ready to take on a deal with you. I'm like, great, okay, so this is what I have. Good deals are hard to find, so it's not every day that I always have a deal available, because I look at them, I analyze them very, very closely. I have a financial background too, so the numbers to me are really important. Like the numbers has to work, otherwise I know. But at the end of the day, that's what I do for my investors. I want to have a personal relationship with all of them. And I want them to be extremely comfortable and know exactly what they get themselves into before they say, okay, you know what, I'm ready to launch with you.
Wonderful. So Elsa, do you help clients or investors to invest in syndication yourself?
Absolutely, that's what I do. So we have, I have a team. So I syndication is a team sport. I don't do this by myself. I have a team I have my SEC attorney, I have myself, I have a few other people that work together as a team. We have someone that just take charge of managing the assets, right? Because I cannot be a one person who do everything. So we have a team of about 5 people, and we each take on a different role. And our goal, of course, is to maximize the returns for everybody. So yes, if you are interested to learn more about what syndication is all about, then feel free to reach out to me via email or text or calls.
Well, thank you for your support. Would you share some experience, past investment to our audience?
Absolutely, yeah. So the most recent one that I did was a hotel syndication here, actually in Silicon Valley. I did land development before I got into apartments. So on that land development deal, we purchased a piece of land for $6.5 million. And we went through the syndication process. We improved the values of the land, and now we're selling that land for $9.5 million. So this piece of land is actually right here in San Jose. And as you could see, we bought that in 2019, 2022 right now. So a little bit more than 2 years. We improved, we did some work on this land, we improved that, and now we're making, we're profiting about $3 million, and that will all go back to the investors, of course, between the GP and the LP. And so that's one of the investment that we are about to wrap up. And then other one I have ongoing right now, where I had significantly improved the values of the property through my we call it value add program. So last year we closed on a 60 units apartment in Pennsylvania, and the property was, we pay our investor 10% preferred return on that one, plus equity. And we bought it for $4.5 million. The property worth over 5 right now through our value add, because what we did was that we increased the rent by $100 per unit. And then we reduced the expenses by pass on the cost of the waters. So before the owner paid for water, and the water bill was high. They pay about $50,000 a year for water for the 60 units apartment. And we implemented what's called the RUBS, RUBS system. So we charge the water back into the tenants, and we say, okay, you know, this is how much water that you spend this month, you're gonna pay for this, we're not gonna pay. So that saved us about $100 per unit per month, right? And for 60 units, if you were to calculate the values of the dollars amount that we increase in the property is about $1.5 million, because commercial property we calculate based on cap rate. So we take net income divided by the cap. So when we save, you know, $50,000, $100,000 a year between rent increase and reduce expenses, and you take $100,000, you divide it by 5 or 6% cap, that's how much you're going to increase in the net values of the property. So far, by implementing very simple system like that, we will exit this deal in 3 years. And based on the way that we calculate, and the property is 100% occupancy right now. So we have no vacant units. If we exit in 3 years, by implementing the system, the property will be $3.5 million more than what we had paid for. So we're into the second year right now, and we'll continue to implement the system until we maximize the profit, then we'll sell.
That sounds great. That sounds like a very profitable way of invest in real estate.
It is very, very profitable. And I like the fact that, you know, we minimize, if you own a single family house and you have a vacancy, basically you're losing 100% of rent that month or 2 months. If you own 100 units apartment and you lose one tenant, you know, you still have 99% of rental income that coming in. So I normally, when I calculate my returns, I want to have my break-even point as about 65%. So that means even if my property, if something so bad happened to the property, and if I can maintain 65% occupancy, we'll break even. We're not losing money. Does it make sense? So yes. We minimize a lot of risk by that. Worst case scenario, you know, in real estate, we know is retain the principal, right? So I try to find one of my way of doing this is minimize risk by doing a lot of market research and make sure that we invest in the right market, pay the right price for it, and have the right team in place.
Would that make it difficult for you? Because the last 2 years, real estate market is extremely expensive. Would that make any difficulty on your investment decisions?
Yes and no. So it's difficult in terms of competition. Competition became fierce the last 2 years because everyone is out there looking for apartments to buy now. And we call them over leverage. So what was a 6% cap market before is now a 5 or 4% because people overpay. It's the same as over here. Probably worth $1 million, they would pay 1.3, 1.4. No difference in the apartments market. And but on the other hand, because of the low interest rate and because of the increase in the price of single family, many people cannot afford to buy a house to live in, so they decide to rent to save money. So that also boosts the rent growth. So we have so many people out there looking for rent, And what I've seen is that we're able to bump the rent more than what we normally would have been able to. So on average, you know, if in the historical path, you have seen a rent growth increase of maybe 2 to 3% a year, but we have seen rent increase 5 to 6%. In Arizona market, some of them even 15 to 20%. So one of the property I just purchased last month, the rent last year was $700 per unit. We took it over and we increased the rent to $1,100 a month, $1,100 a month. And they just rent it. We didn't do anything. We say rent go up and this is what you're gonna pay. They sign a lease and they just move in. Like done nothing to it. So yeah, it's comparative, hard to find apartments now at a good price. But at the same time, because of the rent growth, there's a lot of value add opportunities for us to increase the rent, increase the values of the property.
For the syndication projects, are you looking into hotels, apartments? Is there any other type of syndication that you'd be interested to do in the future?
So yes, I do. I started with hotel. Now I'm in the apartment space, but I also my sweet spot is in development. I love development. So buy the land, get it entitled, get it to shovel ready, and either sell it to someone who built it out or we'll build it out ourselves. And so currently I'm working on a few development projects in other states as well. One in Florida where we developed 240 homes. And then in New Jersey, where I work with my partner to build 400 condominiums in New Jersey. And we're also working on a assisted living project in North Carolina. So wherever the money are, wherever we see the profits and the, you know, there's just people always needs a place to live. And there are assisted living, drugs rehab center is a very strong demand too. So we get into that space as well.
Sounds like you're a very busy woman all over the country.
We all are, and I love it. I love what I'm doing. So I fly almost every other week, and I love what I do, so I don't mind at all.
Great. And are those information available on your website?
Yes. So you can go to my website. It's sunrisedevelopmentsllc.com. You can learn. I have my bio in there. I have some other information about what I do on the website. Also, Daphne, you can release my social media and profile to the audience if you wish to. But I can be reached via email, phone number, or my websites are out there.
We will link Elsa's information below, so you can contact her if you have any questions. And thank you very much, Elsa. I appreciate that you are here today with us.
Thank you so much, Daphne. Really, really appreciate your time and just the opportunity to share with the audience a little bit about, what real estate and syndication is all about. My pleasure. Thank you so much.
Thank you.